In 2008, almost $5 trillion in wealth vanished from the planet. Gone, nearly overnight. One day, folks thought they owned homes, stocks, retirement funds. The next, it felt like standing in quicksand. All because of a mess that started with subprime mortgages, a fancy term for risky home loans handed out like candy. See, back in the early 2000s, banks and non-bank lenders were offering mortgages to almost anyone. Bad credit? No savings? No problem. Some lenders even counted unemployment checks as income. All these shaky loans got bundled together and sold as safe investments to banks around the world. But when homeowners started missing payments, those bundles, worth trillions, turned toxic. The wave crashed in 2007, first in the US housing market. Then, like dominoes, banks began to fall. Northern Rock in the UK saw a classic bank run, people lining up down the street. In Iceland, all three major banks collapsed, sinking the entire country's economy. Europe scrambled, bailing out banks in Germany, Ireland, France, and Belgium. Even Asia felt the tremors. China launched a monster stimulus to prop things up, while Japan and South Korea saw their economies wobble. You've probably heard about the big Wall Street names: Lehman Brothers, Bear Stearns, Goldman Sachs. Most were investment banks, not your regular neighborhood banks, and they held mountains of these rotten mortgage bundles. Fannie Mae and Freddie Mac, two government-backed giants, bought up more than half of these risky loans. Some blame the partial repeal of the Glass-Steagall Act in 1999 for letting banks get too big to fail. But experts say that was just a side note. The storm was brewing no matter what. The fallout was brutal. Governments spent billions bailing out banks, millions lost jobs, and regular people lost homes. New rules came in, like Basel III, forcing banks to hold more cash. But the anger didn't disappear. People everywhere were furious about the bailouts, and that frustration fueled a wave of populist politics. And here's the kicker: the risks never really went away. High government debt, shadow banks, Wild West fintech, and crypto, it's all still out there, lurking. Fast forward to 2025, and some experts warn the cycle could repeat. Young people today, Gen Z and millennials, face sky-high debt, inflation, and a tough job market. It's not the same as 2008, but the warning signs feel eerily familiar. If history teaches us anything, it's that no pile of money is truly too big to vanish. For more deep dives into the world of finance, hit subscribe and stay tuned.